Welcome to Iraqi Dinar Hub. Today's broadcast begins with information that every holder and observer needs to hear. Significant development has been quietly unfolding behind the scenes, while much of the world remained focused elsewhere. What is currently happening deep within the United States banking systems, Iraq's central bank and international financial networks, is far from random. Analysts are describing it as a highly coordinated movement, reflecting precise timing and synchronization not seen in years. Many experts are calling this perhaps the most critical moment in the Iraqi dinar story, and today we're breaking down these developments in detail. Our goal is to keep you informed, prepared, and ahead of the curve by reviewing verified information. If you're holding dinar, monitoring global financial shifts, or waiting for concrete signs rather than speculation, this is essential information. I urge you to stay with me from start to finish, because today's details could influence the days and weeks ahead. This is not hype or recycled rumors. It is based on insider confirmation, analyst observations, and tangible banking activity. In finance, there is a long-standing principle. When systems move ahead of public announcements, it signals that the groundwork is already being laid. Across the United States, financial institutions have reportedly been increasing unusual preparations over the past several days. These are not routine system updates or standard operational procedures. They are structured adjustments to foreign exchange platforms, internal alert notices, and readiness measures designed to accommodate significant currency activity. Employees at major U.S. banks report changes in internal messaging, indicating that teams are being instructed to stay alert for unexpected rate updates and foreign currency fluctuations. This is not standard protocol. Banks typically do not activate heightened monitoring unless anticipating a significant system-wide event. When multiple top-tier institutions mirror these measures, analysts interpret it as a coordinated effort rather than coincidence. That is exactly what observers are seeing now. Parallel activity, signaling anticipation of an external event with global implications. Turning our focus to Iraq, the central bank has reportedly been advancing step by step to position the dinar for greater international integration. Reforms that once seemed slow or stuck in bureaucracy have now accelerated and entered a more advanced operational phase. Observers describe this as a key factor in the current analysis. Iraq's central bank has adopted a new language in its statements, emphasizing completion, readiness, implementation, and modernization shifts away from vague planning or future intentions. These statements are being read as operational confirmations, backed by concrete actions. Digital systems are being upgraded. Connections to international financial networks are expanding. Domestic banks are under tighter oversight, and compliance measures are being reinforced. When a central bank signals that a monetary reform project is moving into implementation, it means the preparatory phase is effectively complete. The next logical step after implementation is visible action, and this is where Iraq's timing aligns closely with the global financial environment. Inside Iraq, citizens and business owners have begun discussing topics that were historically controlled or restricted. Conversations about purchasing power, exchange rate mechanics, and economic stability are now open and increasingly frequent. Governments typically introduce such discussions only when a significant transition is expected. This management of public expectations is essential before implementing major policy changes. Preparations are not limited to public discourse. Reports indicate updates to note structures, training sessions for branch staff, and system tests behind the scenes. These actions point to readiness from the central bank down to individual branches. When this internal readiness aligns with U.S. banking activity, the potential for a broader activation window becomes more realistic. In U.S. banks, internal alerts are connected to compliance checks, liquidity assessments, and cross-border transfer adjustments, precautionary measures executed to handle potential large-scale currency exchanges without disruption. These steps demonstrate operational prudence, preparing the financial infrastructure for an increase in transactional flow. If currencies such as the Iraqi dinar, Vietnamese dong, or Zimbabwe dollar were to revalue suddenly, U.S. banking systems would face the first pressure point due to the concentration of holders within the country. The fact that multiple institutions are preparing simultaneously points to an anticipated system-wide event. International banking networks are also performing synchronization tests on foreign exchange servers, operations that are costly and time-consuming and typically reserved for significant anticipated activity. Analysts ask why these preparations are happening now in November 2025, rather than months ago or later. The most logical explanation is that Iraq's reforms are now aligned with global financial standards. Every time Iraq enhances transparency, international compliance, and banking infrastructure, global systems must adjust to remain synchronized. Observers interpret these visible system movements as confirmation that real preparation is underway, not speculation. Within Iraq, the central bank has expressed growing confidence, publicly stating readiness for international integration. These statements hold weight because they reflect not theoretical compliance, but operational compliance with global financial standards. Iraq would not invest in extensive banking modernization, legal reforms, digital upgrades, and global network connectivity only to maintain a near-zero exchange rate. The purpose of the reform is to strengthen the currency, increase transparency, and encourage global participation. Once a currency becomes internationally integrated, its market value begins to reflect economic realities. Iraq is rich in natural resources, trade potential, and strategic influence. A dinar at fractions of a penny does not match the country's economic weight. Correcting this undervaluation is not only logical, but expected by global financial analysts. Dinar community observers have noted specific signals consistent with the final stages of monetary reform. Banking systems are undergoing tests, and the government is communicating openly with citizens about economic growth, a step typically taken when internal stability is already established. These indicators, combined with technical system tests and public messaging, historically precede major policy shifts. Similarly, U.S. banks are moving into preparation mode, not panic mode. Systems are being tested, compliance confirmed, digital platforms updated, and staff structured for potential sudden rate changes. Banks do not issue alerts regarding foreign currency adjustments without reason, and that reason is likely tied to global currency realignment. This adjustment is not chaotic. It is a recalibration of undervalued and overvalued currencies to align with actual market values. Iraq's dinar is frequently cited as one of the strongest cases of undervaluation. Years of conflict, sanctions, and instability suppress the dinar's value, but Iraq is now stabilizing. Trade is expanding, and the country possesses significant oil, gas, agriculture, and gold resources. In such a context, an artificially low exchange rate contradicts economic reality, and correction is logical. Global currency realignment does not mean collapse, it represents market correction. When a key currency adjusts, the ripple effects impact global markets. US, European, Asian, Middle Eastern financial systems are watching closely, not out of speculation, but to remain synchronized with potential official currency adjustments. Meanwhile, in Iraq, public conversations about purchasing power signal preparations for a stronger currency. Governments do not emphasize this unless they expect real change. Managing public expectations is critical, and these discussions demonstrate readiness at both the governmental and societal levels. The next signals to monitor include additional central bank statements, foreign currency tracking updates, and synchronized rate changes across major banking networks. These usually precede significant financial activity. Once these signals occur, the moment will be public, undeniable, and verifiable through official channels. Timing is key. Iraq has reportedly completed essential reforms, banking systems are ready, and global institutions are acting in parallel. November 2025 marks a period of unprecedented alignment between Iraq's internal developments and external banking movements. This event could reshape not only Iraq's economy, but also global financial flows, trade balances, and international economic partnerships. Other undervalued currencies may also experience corrections, carrying reserves, assets, and interest in asset-backed systems worldwide. The most important takeaway for viewers and investors is to remain calm, informed, and patient. Avoid panic-driven decisions, do not chase rumors, and only act on official, verifiable information. When the public phase occurs, banks will update rates, institutions will follow standard procedures, and exchange opportunities will be available through verified channels. The dinar's journey has been long and filled with speculation and misinformation. Today, the indicators are different, stronger, more coordinated, and based on real, observable movement. Iraq stands at a turning point.